Good morning, everybody, and welcome to our continuing Zoomcast series. My name is Robert Crowder. I'm going to be your presenter today, or at least one of them. Exciting times, certainly exciting times. There's a lot going on in the world right now, but let's focus on what we've got to focus on right now. And that's the myths and misconceptions about ASO. For participating today, you are going to get a CE credit. Mike Ignatz is going to send you a CE credit later on today. And speaking of Mike, also here from the Benefits Trust, we have Robert Crowder, who's going to be our guy behind the scenes, making sure that everybody stays and behaves. Lindsay Gibson is in the house. Jordan Bullholes is here, as well as Carrie Lane. So if you have questions throughout the day today, just either raise your hand emoji so I can see you, so it pops up on the screen and I'll get to you, or put it in the chat box so everybody can see. And everybody, one of these lovely folks from the Benefits Trust will answer your questions, and anybody else can certainly weigh in on them as well. But that way you can, everybody can see. Because the purpose of these events, and we started them a number of years ago, the purpose of these events is really about not being the smartest person in the room. It's about being in a room where everybody gets smarter. One thing I've learned over my years of experience in the insurance business is we share information in this industry. It's like no other industry that I'm aware of, but we truly share information, and that's what it's all about. It's about being in a room where everybody gets smarter. So as I mentioned, Mike's going to send you a CE credit following the session today, providing you stick around till the end. We're also going to sign you up for our Trusted Advisor newsletter, which comes out on a monthly basis. We're 140 months in a row, which is great. As well as that, we're going to get you to hopefully fill out a survey. The survey is going to take you less than 90 seconds to complete, and it also in that survey, it's telling us how we did today and telling us how we can do better tomorrow. Because we always say in our office, how can we improve on what we're doing? How can we do it better tomorrow than we did it today? So we need your feedback on that. But most importantly, in that survey, there's an opportunity for you to tell us what you want to see covered in future Zoomcasts. Give us your ideas. And actually, this myths and misconception idea came out of feedback that we've received from you over the last couple of months. So we're happy to do that because we want to provide value. It's as simple as that. We want to provide value to you. One of the things that's interesting as well, and Lindsay, maybe you can just chime in here right now. But out of this and the meeting that we had last week on this myths and misconceptions about ASO, something has come of it. And we're actually doing a second session with Blake Waddell on our Chat TBT session. So Lindsay, maybe you can just talk about that real quick.
Absolutely. So you're right. So we do Chat TBT the first Wednesday of each month. So the session that Rob is talking to you about is April 2nd. It is ASO Boot Camp, Insights for Beginners. It will be led by Blake Waddell from Waddell Benefits Incorporated and co-hosted by Rob. So we hope to see you there. You can sign up right through our website.
But one of the things that's really interesting, about this is not me or us telling you about ASO. It's about Blake as an advisor talking about his approach to ASO. So it's a slightly different type of presentation, if you would. So it's going to be a good one. So let me share my screen here and let's get started because we only have an hour. We're certainly going to finish on time. The other thing I wanted to mention is we're going to stick around for a few minutes after 11 and answer some more questions and get into more detailed conversation about these things. But if you need to take off at 11, you will certainly be, you can certainly do that and you will still get your CE credits. So myths and misconceptions about ASO. And let's move forward. So what we want to talk about, some of the questions that we're going to discuss and answer is, what is ASO? Is ASO only for big business? The risk mitigation and ASO and how that fits together, how ASO plans are built, drug cards with ASO plans and how you can use them. And these are just some highlights and question answers and discussions. And again, if you've got a question or a thought, put your hand emoji up or put it in the chat box and we'd be happy to discuss it. At the time. And it looks pretty exciting right now because we've got close to 68 people on the call. The call on last Wednesday, we had 100 people on the call, and we've got quite a few more people still coming in. So this is an exciting topic for sure. A little bit about the Benefits Trust. We started on January 1st, 1994. And the reason why I'm telling you this is not to brag about who we are or what we're doing. It's but to give you a foundation that we kind of know what we're talking about in this area. We started on January 1st, 1994. We're a full service third party administration company. We're the largest independently owned TPA in Canada. Excuse me. In 2024, just last year, we got two awards from our friends at Benefit and Pension Monitor magazine as a top benefit provider and a top employer in this industry, which is great. We provide custom employee benefit solutions to your end user clients. As I mentioned, we're a full service TPA, but we work with advisors like yourself, and we provide custom employee benefit solutions, all on a budgeted ASO basis, which we're going to talk about more. We have exceptional client experience. That's what our clients tell us. But one of the things that we do is we answer the phone. It's as simple as that. Benefits are an emotional thing. And whether the call comes from you, the advisor, because you've got to, maintain and enhance a client relationship, whether it's from an administrator, whether it's from an executive, whether it's from an employee, or whether it's from an employee's family member, we answer the phone. So we provide that exceptional client experience. We've got long-term relationships with all the major insurance carriers and Canadian insurance carriers and service suppliers. So we're not tied to any one particular solution, and we'll talk about that more in a few moments. And our target market is really working with clients like yourself, with advisors like yourself, with clients from 1 to 100 employees. And the reason for that is, quite frankly, that's where the market is. In Ontario alone, and I apologize, Simon, but in Ontario alone, there's 460,000 businesses. Well, 440,000 of those businesses have less than 100 employees. The fact of the matter is, the Canadian landscape, the business landscape, is made up by smaller employers. So that's where our target market is. We do have quite a few clients that have over 100 employees. But again, that's what our target market is. So there's our commercial, but it's not, again, a commercial. It's really the foundation of where we're coming from to frame our conversation today. So when we take a step back, a benefit plan is nothing more than a promise between an employer and an employee. It's as simple as that. It's a promise. You work at ABC Company, you get paid $43,000 a year or $96,000 a year. You get 3 weeks vacation. You get free parking. You get a holiday party and a summer barbecue. And if you go to the dentist, you get reimbursed 80% of your expenses to a maximum of $1,500, for example. That's just a promise that an employer is making an employee. And it's interesting because when you think about that, and when a client thinks from that perspective, from that mindset, they're freed up and they can go, hey, as the business owner, as the business leader, I can make whatever promise that I choose. If I choose to pay somebody a certain amount of money, and they accept it, that, we've got it's a promise, and you got to keep that promise. The same thing with a benefit plan, but it frees up their thinking to say, hey, we can promise whatever it is that we want. But in order to determine or help them determine what they want to promise their employees with respect to benefits, you got to know where your client is going. And how to know where your client is going? It's quite simple. You've got to ask. You've got to ask the right questions. The internet has all the answer. Chat or AI, pardon me, has all the answers, but it doesn't have the questions, right? It needs you to ask those questions, and it's important to ask future-based questions about where your client is going. And the best question that I've ever heard is from Dan Sullivan from the Strategic Coach. And I've been using it personally for years, and it's just fantastic, but it's simple. If we were meeting here 3 years from now and you were looking back over those 3 years, what has to have happened for you to say it's been the best 3 years of your life? What has to have happened for you to say it's been the best 3 years of your life? And it's interesting when you ask a client that question or a prospect that question, it's important because they're going to tell you where it is that they're going. They may not have thought about it, or I can guarantee you they've thought about it, but they may have not said it out loud. But it's going to give you a roadmap of where it is that they're going to go, where it is that they're going to go. It's going to be in their GPS. It's going to be in your GPS. They're going to say, we're going to grow. We're going to, deal with these tariffs in this fashion. We're going to merge with another company. We're going to enter into new marketplace. We're going to, grow so we can go public. They're going to tell you all sorts of things. But that's the foundation, when you know where they're going to go on how you can help them reach their goals through their benefit plan. The fact of the matter is, right now, there's a shitstorm going on. We all know that. There's a lot of noise going on in the world. We're in the first few days of an election campaign for our, federal leader. There's some interesting things going on in, south of the border, and that's affecting us in Canada. It's affecting the world. There's a lot of noise going on right now. But it's important as a professional advisor to help your clients create some clarity. And a question like this, a future-based question, is going to help them create some clarity. And not only are they going to be happy to answer it, in my opinion, they're going to be happy that you asked the question. It's going to separate you from other advisors that they might be working with in other areas of their business. But it's going to separate them because it's going to provide some clarity. It's going to provide some motivation. So it's a great question. All right, let's jump into it. What is ASO? ASO in the insurance business, and just like many businesses, in the insurance business for sure, we use a lot of TLAs. Does everyone know what a TLA is? It's a three-letter acronym, right? We use a lot of TLAs, shortcuts, right? But ASO stands for Administration Services Only. It's often referred to as self-insurance. But let's be clear on what it is. It's self-insurance for health, dental, and sometimes short-term disability. Okay, that's what it is. We're not self-insuring life insurance or self-insuring out-of-country emergency travel coverage. Life insurance, AD&D, long-term disability, critical illness, stop loss. They're out-of-country emergency travel coverage, out-of-province emergency travel coverage. All of those things are fully pooled, right? ASO just refers to a component of a benefit plan. Yes, sometimes it's a large component of a benefit plan, but it's a component of a benefit plan. So people think, and this is where the misnomer comes in, the misconception comes in. They go, "Oh, I'm too small to have ASO because I can't afford to keep a $25,000 promise if someone dies." No, it's just a component of a benefit plan. Again, the health, dental, and short-term disability. So when we talk about the health, dental, and short-term disability from an ASO perspective, we're just talking about those components, and we're not talking about the life, AD&D, and CI, and so on. And ASO means, yes, it's self-insurance, but really it's just pay for what you use. No more, no less. Pay for what's used. No more, no less. Simple as that. So the myth and misconception, again, is with ASO, the cost of benefit plans changes every month, and it's unpredictable, and it's based on claims. Well, that's true. It is. But that's a pure ASO type of an arrangement. And many large companies have this type of an arrangement because they've got thousands upon thousands of employees. Simple as that. They just pay as their claims come in, and they've got deposits on account with insurance companies or TPAs, and that every once in a while they dump money in, or the TPA or the insurance companies takes money out of a dedicated account, and it just pay as you go. But with smaller organizations, and what we provide, and the solution that we provide, and we've been providing since 1994, is we provide a budgeted ASO solution. It's more predictable payments every single month, and it allows for those predictable payments. So we're setting phantom rates for health, and phantom rates for dental, and phantom deposits for short-term disability. But we create those single-family health and dental rates. Then they're set every year based on the analysis of the previous year or year's claims. These budgeted rates are normally only change once a year, and it looks and tastes and smells and very similar to a traditional plan. It's just an alternative funding method. So when we're thinking about ASO, we're thinking about just, again, the health and dental and short-term disability component, but a budgeted approach creates that familiarity. It creates that budgeting. It creates that, more or less the same payment every single month unless the population changes. So it's very similar to that traditional plan. ASO is only for large business. When I first started doing this, the biggest roadblock I ran into is, oh my God, you can't have ASO for anybody less than 100 employees, or you can't have ASO for anybody less than 250 employees, or you can't have ASO unless you've got, $250,000 in health and dental claims. You can't do it. It's impossible. It was these types of stereotypes. And I'm saying that's wrong. This doesn't make any sense to me. The whole business started, and I don't know if you've seen my videos on Instagram or TikTok. If you're not on Instagram and you want to check it out, check out our Instagram page. But the whole business started. The seed started with a prospect that I had way prior to 1994, and they wanted a benefit plan that it was a pharmacy group, and they wanted a benefit plan that didn't include drugs. It didn't include drugs. They said, we'll pay for whatever it is that we use, but we just don't want drug coverage because they were a pharmacy. This was, 1992 or whatever it was. They didn't need that particular promise included in their benefit plan. So we set up a budget essentially for them to cover their claims. And that was the seed that grew the benefits trust to where it is today. So every conventional fully insured group plan, no matter what size it is, has monthly premiums set based on the catastrophic risk insurance embedded into that plan, anticipated transactional routine claims, right? Insurer reserves, really? Insurer reserves, I want to talk about that, but insurer administration expenses and profits and commissions. They take all those components and in a fully insured plan, and they mix them together and come out with rates for you. Right. But, it was interesting. I helped this one particular friend of mine out with his business, and he's got a fully insured plan, in this case with Empire Life. And he goes, I don't understand these reserves. I don't understand. And he's a professional accountant. And he goes, I don't understand this reserve calculation or these reserve calculations. He goes, quite frankly, I think it's bullshit, quote unquote. He goes, incurred but not reported. And I'm explaining to him what the insurance company feel, why they have to have these things. He goes, that's wrong. He goes, claims are paid instantly. You got a drug card, so people aren't taking those receipts like in the good old days and putting them into a shoebox on top of their fridge and saving them up for the end of the year. Right? They're getting their claims paid for their drugs right as they happen, right at the point of purchase. Same thing happens when they go to the dentist. It's done at the point of purchase. Right? The same thing happens when they go and get a physiotherapy claim or a massage therapy claim or a vision care claim. Everybody's got an app now, including us at the Benefits Trust. You take a picture, click, you press send, within 24 hours, you get money deposited in your accounts. Nobody is waiting. So why do we have to have this reserve? Or why do the insurance companies have to have the reserves? Well, the insurance companies have the reserves to protect themselves, but they're artificial and artificially high. Anyways, I think we should stand together as an industry and talk to the insurance companies about this and say, this is ridiculous. Stand up to them and say, we're not including this. Simple as that. But anyways, so when we're talking about, it's only for large business, budgeted ASO plans, they set their own funding levels based on these factors, and they expect that the insurer's reserves are not required. They're holding on to their own reserves. They're taking the risk. They're holding on to their own reserves, right? So there's no IBNR and no other reserves. Stop loss and out of country are not embedded into health rates. They're part of fully pooled rates, right? There's more transparency. And the same analysis and mathematical models work for small and large cases. Size doesn't really matter. It's about mindset. It's about mindset. It's not about size. It's about the client mindset. And it's interesting when you think about an ASO plan or a budgeted ASO plan. When I say ASO plan, I'm just talking about budgeted ASO plan. When you think about it and you think about a business structure, premiums are for risk. You have premiums for risk. Many of you, if not all of you, have cars. You buy insurance to protect against total loss of that car or significant catastrophic damage to that car. Right? Same with your home. Same with the contents of your home. You buy things to protect against catastrophic, sudden, unexpected events. Premiums are for risk. Budgeting is for routine expenses, right? No other business services that we buy. We've got 35 employees in our organization, and we buy lots of different services from other companies. No other services that we buy in our business has insurer reserves built into it, right? So why do we need to do this for routine health and dental claims? So it's kind of interesting. It's really about a mindset. So it's not necessarily for just large businesses. We've got thousands of businesses that are not large, and they have been using budgeted ASO plans for many years. Continuing on the myths and misconceptions, again, just for large business. Well, traditional insurers tend to charge high administration fees, and I guess especially for smaller businesses, their TLRs, the target loss ratios, somewhere between 25 and 35% often. It's amazing when you think about it. They're saying every dollar that comes in, we want to use 75 cents of it for claims and or 65 cents of it for claims and the rest for, keeping the plan and reserves and so on. Well, budgeted ASO, again, with the transparency, and the business model, especially for smaller business models, they can set more reasonable administration fees, 10 to 20% for the same size business, including the commissions. Including the commissions. It's a lot smaller. It's tangible. They understand it. Okay, so it's the cost of my claims. I get it. It's the cost of my claims plus the administration fee. And let's just use 15% as an example. Great, 10% to run the plan, 5% commissions. That's reasonable. Makes sense. Terrific. Excellent. What's there to discuss? What's there to discuss? Perfect. Oh, and by the way, the next myth and misconception. If we suddenly have catastrophic claims, we end up paying for a large funding deficit. Well, that's where you have to have the right risk in place. Again, you buy insurance to protect against catastrophic, sudden, unexpected events. So when we're looking at a drug plan, where can you have a catastrophic expense? Well, if you're promising someone you're going to get 100% prescription drug coverage, up to $1 million, somebody could have a $100,000 claim or a $200,000 claim. So what we do is we buy excess medical stop loss insurance, and it protects the employers from the costs associated with new catastrophic medical claims. So if someone's diagnosed with a particular ailment and they need, $100,000 or a $200,000 drug, fantastic. They're going to get that drug, but all of a sudden the excess medical stop loss insurance is going to kick in, right? It's a fully pooled benefit, meaning it's not based on your client's claims experience, which makes it more cost effective. It's based on the entire pool's experience. And we have stop loss attachment levels from $7,500 and up. Large amount pooling is also used from an insurance company perspective, but it's the same thing. We call it stop loss. They call it large amount pooling, right? But it's usually set at $10,000 or up. So we can take it as low as $7,500, but it goes up to $1 million of coverage, right? It's a pretty powerful benefit, right? It's just like, your car insurance. You have a deductible for car insurance. If you get into a small little parking lot dent, you're exchanging checks, exchanging payments, right? But if you have a large catastrophic claim, you're calling the insurance company. That's what stop loss insurance is. So you don't suddenly have to start funding a large deficit because you've got the right insurance protection in place, right? Claims in a budgeted ASO plan are managed by the benefits trust in the same way an insurer manages these claims. You can also, with the appropriate plan design, also mitigate risk. And again, that customized solution, you can put in plan maximums. You can put in plan maximums for the employee and then combine maximums for the rest of the family if the client is so desired to do so. Those family maximums that we just talked about. You can put in drug formularies, the Formulary Protect and Formulary Protect Plus. I know we've spent a lot of time on that, and check out our website at thebenefitstrust.com to find out more information about that, or reach out to one of our reps and they'll be happy to find out about or tell you about that. Healthcare spending accounts provide budget certainty, but again, it's about managing the risk and risk mitigation. It's not necessarily a solution for all clients, but it's a solution for certainly some clients, or a combination of all of these things. And again, it's that customized plan design. It's what is it the client wants to promise their employees. But having the correct insurance in place when there's risk associated with the promise that they're making is critical to protect the integrity of the benefit plan so it continues into perpetuity for all the employees. So again, we're going to send this to you. I don't expect you to look at it real close. And I see Greg in there and he's just like jumping in. But don't worry, we're going to send this to you. But quite simply, the numbers here, and I tried to blow it up last time and I can't, and I don't know. Oops, sorry, let me go back. But the member has a claim amount of $1,500 or $150,000. $7,500 is picked up by the employer through the large amount deductible and the stop loss. The $142,500 is paid by the insurance company. This explains it in a little bit more simple English than I've certainly explained it, but we're going to send that to you. So the next myth, with an ASO plan, you're not insured against risk. Well, we've talked about that. It's not the case. You are insured against risk. Most routine medical and dental claims are high frequency, low cost events. You don't need insurance for those. You need effective budgeting, appropriate budgeting, right? How can you insure bread? Well, hold on a second. You're gonna, buy a loaf of bread every 4 days or whatever it is, depending on your bread eating habits in your home, right? You can't insure bread, right? You can. It's $5 a loaf, right? It is what it is. Insurance is designed to protect policyholders from catastrophic, sudden, unexpected events. Buying glasses or going to the dentist is not catastrophic, sudden, or unexpected. Tonight, I'm going to take a drug before I go to bed. It's a generic equivalent of Lipitor, right? It's pennies, so it's certainly not catastrophic from a financial perspective. It's not sudden. I've been taking it for years, and it's not unexpected, right? So when we use that definition that I don't think anybody can argue with, right? It's not sudden, catastrophic, or unexpected, right? The rest of it is just budgeting. That's all it is. It's budgeting. How many people in this room, and there's what is there on this call right now? There's 86 people on this call. How many of us are going to go to the dentist sometime in the next 12 months? Well, I am, and I'm willing to bet that of the 86, well, Greg is going. Yep, I saw his hand move, and Wayne's going. Yep, he's nodding up and down. But everybody's going to go to the dentist in the next 12 months, presumably, right? Or 80 of the 86 of us are. That's not sudden. It's not catastrophic. It's not unexpected. The chances are the bill's going to be a few $100, right? It's about effective budgeting, right? Simple as that. For traditional insurance, where you've got low frequency, high cost claims, you need to buy insurance. Again, that life, that AD&D, that LTD, the critical illness, stop loss out of country. If I make someone a promise in my company that I'm going to pay their beneficiary $50,000, God forbid, should they pass away, and then all of a sudden they do, and I got to keep that promise, I'm going to have to go to Lindsay, and I'm going to have to go to Jordan, and I'm going to have to go to Carrie and all the other employees in our organization and say, thank you very much. I apologize, but that benefit plan that you've enjoyed, we have to cancel it now because, this person passed away and I made them a promise and I got to pay $50,000. So there's my budget for the entire year. Meanwhile, Lindsay and Jordan and Carrie are going to go, well, that sucks. And we're going to go get another job somewhere else. Right. And that's awful. So you need to have insurance to protect against those low frequency, high cost claims. And it's pennies, 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 pennies. So again, that's the difference. Low frequency, high cost claims need insurance. High frequency, low cost claims need budgeting. The Benefits Trust provides solutions from several specialty providers that can take advantage and offer advantageous rates and match coverage to client needs. Insurance or fully pooled benefits are an essential part of risk protection with an ASO plan. Again, it's not ASO for the whole plan, it's ASO for part of the plan. But it's interesting because we deal with so many different providers, we can provide customized solutions that are often more advantageous. An example, we were dealing with a flight school, or we've been dealing with a number of different flight schools. And pilots, pilot instructors, every pilot has to have a medical every year, every 2 years, or whatever it is. But we were able to go to a long-term disability insurance carrier. And we said to them, we want to have a solution. And we want you to rate the solution that says, if an instructor pilot, an employee fails their medical, they automatically are eligible for long-term disability. And the provider was able to do that. So this school has 20 some odd flight instructors, and we were able to put this long-term disability benefit in place. They loved it. The instructors loved it. And it was a unique solution. Now, guess what happens when the phone rings and someone says, let me quote on your benefit plan? They're going, you can't quote on this stuff. You can't get it. You can't get it from a mainline insurance supplier. So it was unique. It was specific. The client loves the solution. The employees love the solution. But more importantly than that, the client, the end user client, loves the advisor, because what was the advisor doing? He was advising. He was advising. He was doing his job. So it's a great way to set up protection against catastrophic, sudden, unexpected events and still have that budgeted ASO in place and have that custom solution for that client. So again, this is just a partial list of all of the insurance companies that we work with, but Lloyd's of London, they'll insure anything. They'll insure just about anything for the right price. Right? It's as simple as that. But again, a number of different service suppliers and so on. We can't have another myth. We can't have an employer-employee cost sharing with an ASO plan. Can't have it. Well, you can because we're using phantom rates for the health and dental. The employer-employee cost sharing, for example, let's just say the employees pay 50% of the health and dental costs for payroll deduction. Well, it works the same way in a budgeted ASO plan as it does in a conventional plan. We set those single and family health and dental rates, and they're set annually. But when budgeted rates are reset at renewal, the employee share is going to reset at the same time, just like a traditional plan. And it's interesting because going through this process a number of times, we've got a particular client that I know that sets their rates relatively conservatively, a little bit higher than they possibly should. They want to build up a surplus in their plan. So they set their rates conservatively. So there's a surplus built up in their plan. So next year, when we come along and we say, hey, your rates need to change, they either go up or down. They've got a surplus in place so they can smooth out some of those increases. But not only that, what they do every year is at Christmas time or in December, they go, hey, great, because of the way the plan is working and you guys are doing a great job, we, the company, are going to pay for the cost of your insurance this month. We're going to pay for the health and dental 50% your share. Right? It's a gift. It's something. They use it as a tool to their advantage. It's as simple as that. They use it as a tool to their advantage. But you can have employer-employee cost sharing with an ASO plan. This is just a sample bill, and I don't expect you to look at it. Again, we'll send you the slide deck. But as you can see, we're just sending, medical and dental rates at $15, $40. These are just examples. Right. But hey, great. You're 50%. Well, the employee's cost is $20 and the employer's cost is $20. It's as simple as that. And again, we don't expect you to see that, but too small. So myth. With an ASO plan, there's no cost containment because every single claim is just going to be submitted. Well, again, not true. That's just a myth. It's not true. In any ASO plan, it's a promise. It's a promise that an employer is making to an employee, as simple as that. In that promise, there are plan maximums, there are limits, and they're managed by the benefits trust the same way an insurer manages these requirements according to the benefits plan contract. Like I said in the example at the very beginning, a benefit plan is a promise that an employer makes to an employee. You work here, you get paid $43,000 a year. You get 3 weeks vacation, and if you go to the dentist, you get reimbursed, 100% up to a maximum of $1,500. That is just a promise they're making. What we do at the Benefits Trust, just like any TPA does or any insurance company does, is they capture that promise. They record that promise. They communicate that promise. And when someone submits a claim, we say, hey, great, here's your reimbursement based on what that promise is. Our trained staff members process and pay all the claims, which is, it's more oversight because we're having somebody look and touch and smell and taste the claim. Right? We're having somebody do that. So it's based on the promise that the employer is making, and it's the benefit services contract that is in place. It's as simple as that. Right? So that's just a myth. There's no cost containment because we'll just pay anything. That's not true. Matter of fact, one of the things that we do, and I know a lot of other TPAs do this, is they go, hey, if somebody makes a mistake, and what happens if somebody makes a mistake and pays over the limit? Well, guess what? We eat it. It's as simple as that. ASA benefit services contract specifies what eligible and ineligible expenses are, reimbursement percentages, annual lifetime maximums, etc. Monthly financial statements are broken down based on the type of claim, and it's sent to you as the professional advisor, and it's sent to the client every single month so they can see exactly where their claims are. But it's important to note that the benefit services contract deals with what is going to be an eligible expense and what's not going to be an eligible expense. So let me just take a little sidetrack here for a second. So you got a company owner, a business owner, or a couple of owners of the business. And they say, hey, great, I want my benefit services contract for my group within the group, or, my two, the two employees, the two owners, the three owners, whatever it is, their family members. We want that benefit service contract to read 100% of every eligible medical expense. 100% of every eligible medical expense. No deductibles, no co-insurances, no maximums. And then for the employees, we want these other maximums in place and so on. Great. What have you just done? You've created an executive plan that pays for all eligible medical expenses as defined by Canada Revenue Agency as a tax-deductible expense to the business, and the benefit is received tax-free. Simple example. I use glasses when I'm using my screen. I don't use them for driving. I don't use them for reading. I don't use them for skiing. I don't use them for anything, right? I just use them when I'm reading my screen. So I went and got this new prescription because I was getting headaches with my screen. The doctor gave me this prescription. I said, fantastic, right? I'm going to get these glasses, but I said, I want 3 pair of them. And the person that was assisting me said, Rob, they're $600 each. That's going to be $1,800. I said, no, I want 3 pair of them. I bought 3 pair of glasses. I wanted one for my office, one for my home office, and one for my knapsack, my briefcase, because I never want to be able to be without my glasses. I'm a forgetful guy. I lose things, right? And leave things. So I said, hey, I'm not going to deal with this. So what I did is I bought 3 pairs of glasses. It was $1,800. That $1,800, if I had a traditional plan, would have cost me $3,600 because I would have had to earn $3,600 and pay 50% of that in taxes to our soon-to-be new government and our provincial government. And you know what? Now it's a tax-deductible expense to my business because I've run it through my benefit plan. My benefit cost just increased by $1,800, but I received the benefit plan tax-free. Makes sense. Great. Think about that. Makes sense. Talk to a client about that, and they go, yeah, that makes complete sense. I get it. Here's a sample of the monthly financial statement. Again, we're going to send this to you. But it just shows exactly what's happened on a monthly basis. So in this particular example, again, I'm not asking you to read this, but the client sent us $7,201.21 for all of the promise that they're making their employees, the insurance and the budget. Great. We sent $1,402 out to the insurance companies for premium. We spent $4,109.32 based on the transactional or the high frequency, low cost claims that they had. We spent $896 in plan operation costs, which includes your commissions and our fees. And in this particular example, the client has a surplus of $819.60. Great. Second column is year-to-date cumulative, so they can see that they've got a surplus. And then the third column is previous year-to-date cumulative, so they can see where they are year over year. One interesting thing about this report is, as I mentioned, it's sent out on a monthly basis, and there are no surprises. That report eliminates surprises. And renewals are simple, they're easy, they're straightforward. Lindsay, you had a call recently. We were talking about it yesterday with a new advisor who delivered their first renewal for a case that has been in place for just over a year. Tell us about that.
So it's great. So they've been with us for over a year, but have had active benefits for multiple years. So he received his first renewal. I believe our underwriters suggested a +7, but they've been very stable. The advisor came back and said no, he'd like no change. And our underwriting team said, no problem, we'll do that. So it literally was a 30-second renewal, something that he was not used to from the traditional world, and was very excited. And I think it's going to result in a lot more business coming to the Benefits Trust.
Thanks, Lindsay. But it's interesting because the client has seen that report. The client has seen that report on a monthly basis, so they know exactly where they stand financially. The advisor has seen that report on a monthly basis, so there aren't any surprises. He talks to the client 30 seconds later. Yeah, you know what? We've got a surplus. Let's just keep it where it is. What do you think? Great, no problem. Done. Yeah. I go to the CGB. Talking too much and not thinking. Filter, slow down. I go to the
CGIB.
What is it?
CGIB.
CGIB conferences all the time. You know what they have? Dave Patchers, by the way, he turned 60 just I think on Sunday. So wish him a happy birthday if you're talking to him. But anyways, uh, they talk about delivering bad renewals. Oh, that's like nails on a chalkboard. Bad renewals. I hate that. Good renewals. I hate that even more. There's no such thing as a good or bad renewal. It's a renewal. It's not good or bad. It's only bad or good because the client is surprised. People don't like surprises. No one likes surprises. This eliminates surprises. Budgeted ASO plans eliminate surprises. It's as simple as that. All right, I can go on and on about that. The claims experience for our company isn't stable. We're not a good candidate for ASO. Another myth. Another myth. Well, what's stable? What's normal? You know what normal is? Normal is a setting on your dryer. That's all it is. Go to your dryer right now, not right now, after the meeting in 20 minutes, and look at your dryer, and there's a setting that says normal. That's the only normal thing about anything. Claims experience for our company isn't stable, so we're not a good candidate for ASO. Well, again, it's normal for claims experience to fluctuate over time. Some businesses have, cycles. Some businesses are busier in the summer than in the winter. Some businesses are busier in the winter than in the summer. Right? So when people are busy, they don't go to the dentist. When people aren't busy, they go to the dentist. Do you know when the busiest month for dental claims is? It's the end of August, beginning of September. Why? People take their kids to the dentist before school starts. They go to the dentist, they go out and buy new shoes and pens and paper and whatever. That's the busiest month. Because what? People got time off. Summer, right? Our budgeted ASO models take a long view. They look at the last 2 years, 3 years of claims experience and we take these into consideration at the proposal and at the renewal each month, right? Client's aware of that. Hey, some months are going to be bigger than others. And especially if you've got a small case, there's only 10 employees or 5 employees or 3 employees. Hey, great. If someone goes to the dentist this month or 2 people go to the dentist this month and the claims are, $500 or $1,000, we know they're not going next month and the month after that and the month after that. Right? It's not claims experience doesn't have to be stable. Again, stable equals normal. Normal is a setting on the dryer. That's it. Right? Simple as that. Right? Unlike a conventional group insurance plan, surpluses and deficits are reported on a monthly basis. You saw in that previous statement that we showed you, it's on a monthly basis. In that case, the client had in that example, the client had a surplus of $800 or whatever it was. Great. We're not sending them the money. They're not asking for the money. They know that's on their account because next month they might have an $800 deficit. Right. So it's reported on a monthly basis. Large swings, if large swings suddenly occur, it's noted and can be attended to at that time. So for example, all of a sudden, an executive goes in and says, hey, great, I'm going to get $25,000 worth of dental work done. We may want to adjust their budget, or they may want to wait to the end of the year. It's entirely up to them, right? If there's large unexpected swings. But how can there be large unexpected swings in routine claims? There really can't be, right? Not everybody is going to, all of a sudden max out their drug plan. It doesn't happen, right? So this budgeted ASO solution really allows employers to understand what their planned costs are throughout the year instead of waiting for that good, bad renewal. They see that report on a monthly basis. It eliminates surprises. No one likes surprises. We got time afterwards. I'll tell you a great surprise story, but no one likes surprises. We have high turnover, with our employee population, so we're not a good candidate for ASO. Well, you know what? That's, take it or leave it approach. Great. That doesn't make any sense to me. That makes 0 sense to me. Actually, less than 0 cents to me. Conventional group insurance plans do not offer, especially small cases, they don't offer any type of creativity, in my opinion. It's really that take it or leave it type of component. When someone says to me, we've got high turnover, I go, fantastic. Here's a great opportunity. Here's a great opportunity. You can provide a customized plan design so it doesn't what's the word I'm looking for? Impact, if you would, that traditional plan. Because if I'm working for a company and I know I'm going to last 6 months, after 3 months, I'm eligible for benefits. I'm going to take my 3 kids to the dentist. I'm going to get prescription drugs. I'm going to get new glasses. I'm going to do all the things. I'm going to use that benefit plan to the best of my ability. Then I'm going to move on. What happens? The experience stays with the company. They're paying for that. So what about coming up with a tailored solution that makes sense? Right? That makes sense. A budgeted ASO plan allows for that strategic plan design. You can build a plan that makes sense for your client. For example, you can have a different strategy, a different benefit plan strategy for employees that have less than 2 years of service. Great. So you're going to get covered for life insurance. You're going to get covered for AD&D insurance and critical illness insurance coverage. We're going to cover you for out-of-country emergency expenses. And if you've been here for less than 2 years, you're going to get a $500 healthcare spending account. So we're going to cover you for that catastrophic stuff, and we're going to give you a $500 healthcare spending account. Great. If you leave after 3 months or 6 months or 9 months or whatever it is, fantastic. Have a good trip. See you next time. All right. But it limits the client's exposure to all of a sudden thousands upon thousands of dollars of claims from a traditional plan design with a traditional insurer where everybody has to be treated the same. No. What are the group within your group? Ask those future-based questions, and you can set up a plan design that works for them. Okay. Budget ASO models take into account your client's particular employee claims or population fluctuations and experience into consideration, and you can set the plan design according to those needs. And when you think about that, it's powerful. We have a hotel client. And it's in a smaller market, but we have this hotel client, and it's kind of interesting because they had a lot of client member turnover. And years ago, we put a plan in place where we said, great, everybody gets this plan. And it was looked like a very conventional type of plan design, but it was a pretty rich benefit plan. And the benefit plan said, if you're here less than 2 years, you get 50% reimbursement of everything. If you're here 2 to 4 years, you get 75% reimbursement. If you're here more than 4 years, you get 100% reimbursement. So we ran this plan for years and years and years, and then all of a sudden a new controller came into place and calls me in and rakes me over the coals and saying, I've looked at your benefit costs over the last number of years, and they've just gone up and up and up and up and up. And I said, that's fantastic. And I said, let's look at your employee turnaround, your employee turnover. How has that changed? And he goes, what are you talking about? And I explained to him why the plan design was set up and how it was working, because the majority of people that were in that plan design were now in the 100% reimbursement section because they'd been there more than 4 years. He called me a little while later and he goes, yeah, I just looked into that. And you know what? Our training costs are way down because our turnover is way down. So the delta in the benefit costs is far less than the training and turnover and onboarding costs. So it works. It works. Myth with a ASO plan, with a TPA, you can't get a drug card. Hogwash. We use Claim Secure as our drug card engine just for the drug card component, right? And they're owned by Canada Life. They're huge. I'm saying 2.5 million members here, but I think it's a lot more than that. I don't know where we got that number from, but I think it's wrong. But anyways, it's huge, right? We produce these cards in-house. We either produce an actual card, so it can sit in your wallet. We produce an electronic card. It's on everybody's app. We've got these cards on place. But the beautiful part about it is we can set up as part of the benefit promise if a client wants, we can use Canada Life's, or in this case, Claim Secure's Formulary or Formulary Protect component that again manages drug costs, helps manage drug costs. We use their authorization network. We use Claim Secure as our drug card engine. It's as simple as that. And again, it's on your app. It's easy. It's simplistic. It's snap and send. It's a true experience. It's fantastic, and works well. So people are looking for excuses. That's not one of them. That's a myth. Yeah, you can have a drug card. And I'm pretty sure all TPAs offer drug cards. And they, quite frankly, use the services of others. They use the services of others because those drug card engines are quite good and very comprehensive. It's interesting. This is another great myth. With the TPA, there's no monitoring or audit process involved, and there's a lot of fraud. And it was interesting because we were in a meeting, or one of our guys was in a meeting recently, and someone was really pushing them, and it was from an insurance company. You guys have no fraud protection. You guys have none of that in place. And how do you address that? And they were trying to rake us over the coals, and we said, fantastic. Just out of curiosity, how do you address it? But we'll get to that in a moment. But our adjudicators are trained to identify potentially fraudulent expenses and claiming patterns. Right. So we're actually looking at the claims and talking to the claims, looking at talking about them. Here is the actual claim. We're matching things up, right? We're looking for fake receipts, right? We're looking for things that are out of the ordinary. A simple example, and this started with us years ago, but I was skiing at Mont Tremblant. I fell and I dislocated my shoulder, and I came back to Ontario and needed, a lot of physiotherapy to get my pitching arm back so I could open for the Blue Jays that year. And it was interesting because I went into I've never had physiotherapy before in my life, and I went into this particular clinic that was right around the corner from my house. And they said, "Oh yeah, you've got a dislocated shoulder, and there's very little range of motion, and we're going to need a lot of physiotherapy." And I said, "Great." And then the first thing after the initial conversation, the physiotherapy asked me, he said, "Do you have a benefit plan?" And I said, "Well, you're asking the wrong guy, but let's play along." And he goes, "Because at our clinic, you're going to need a lot of physiotherapy. And at our clinic, we're going to call it physiotherapy until that benefit runs out. Then we're going to call it massage therapy. Then we're going to call it chiropractic coverage." And I said, "Oh, well, that's interesting." And he goes, "Don't worry, we'll take care of all the paperwork." And then he said, I see by your ring, you're married. Is your wife on the benefit plan?" I said, "Yeah." And then he goes, "If that runs out, then we'll just put the claims through on her name." And I'm going, "You're interested in how you get paid. You're not interested in my health, and that's wrong. So I'm going to go somewhere else." So what we did at that point, and that was again years ago, is we set up these processes in place. When you see someone going to the same appointment this is just a small example, but somebody going to the same appointment every Thursday at 3 o'clock for physiotherapy, and all of a sudden Thursday at 3 o'clock turns into physiotherapy or massage therapy, we start asking questions. And we ask questions of the clinic because they go, "Oops, caught." Anyways, we look at these claims instantaneously. All right, we look at these claims, we look at micro patterns versus macro patterns. Insurance companies are great. They can stand up in front of audiences and they can say, "We've got, we spend $1 million a year on fraud prevention, but we're looking at these claims that have happened 2 years ago and looking for trends." Well, how's that going to help a client? How's that going to help a client today? It's going to help a client potentially in the future, but how's it going to help your client today? We're looking at these things every single day, right? Um, Myth, there's no way to tell me if the TPA is a serious business or just someone paying claims out of their basement, quote unquote. Right? Many third-party administrators are indeed nothing more than storefronts. They use other payment facilities. They're using Green Shield or an insurance company to pay their claims. They're just packaging stuff. It's kind of like Amazon. They're buying stuff from or getting stuff from other people and then reselling, putting it in a box, right? At the Benefits Trust, we're a full service, robust TPA. We have a reputation in the marketplace that you can research if you're not familiar with us. Go to thebenefitstrust.com. We've been around for a long time. But I think it's important to ask detailed questions. Who pays the claims? At what frequency? How are, client inquiries handled? How quickly are they handled? How long have they been in how long has the TPA been in business? Because there's a lot of TPAs that are popping up, and all of a sudden they realize that they got to be around. There's things you have to do as a TPA on a daily basis. There's things you have to do on a monthly basis. There's things you have to do on an annual basis, and there's things you have to do every single year that you have to take into account the previous years. So it's not as easy as it looks, right? But it's important for you as an advisor and for you to ask a lot of these questions in advance. So when you present to a client, you've got those answers in your back pocket, in your toolbox, so you can answer them effectively. Right? It's important to buy from the right company. As I like to say, is there a better way for benefits? One of the things, and again, we're going to send this to you, but the title of this is "We Do the 5% Extremely Well." We do the 5% extremely well. As I mentioned at the beginning of this presentation, we answer the phone. We answer the phone. someone calls in, we're going to answer the phone. We're going to ask some security questions to make sure we're talking to the right person and can provide the appropriate information, but we answer the phone. You don't have to enter your 17-digit PIN number or account number and then certificate number and then press 1 for health and 2 for dental. And then all of a sudden, oh, we're experiencing higher than volume calls. Please stay on the line so you don't lose your queue or your place in the line, right? Everybody's done that. Everybody's done that, right? And it's just so annoying. My son, Robert, and I, we worked together, but, it was a good idea to name him after me because that was a good idea at the time. But when we fly on Air Canada together, it breaks their brains. The system doesn't work. Robert Crowder, Robert Crowder. Even Robert J. Crowder, Robert W. Crowder. Type those into the box. We want boarding passes and we want them to be beside each other. No, there's already a Robert Crowder in that aisle. It doesn't work. They don't recognize the middle initial. It breaks their brains, right? It's crazy. Trying to deal with Rogers or TELUS, right? It's amazing. The amount of time that I've spent on the phone with Rogers in my life, if I could have all of that back, I would have a 3-week paid vacation, right? It's mind-blowing. We handle inquiries, we do it well, we do it extremely well. That's how we've set it up from our end. Because benefits are emotional. Benefits are emotional. You can go to Montreal from Toronto. There's 3 different ways, there's lots of different ways you can go. You can drive your car. You can take a bus. You can hop on Via Rail. Great way to go. You can hire a private jet. Go to the special terminals at both Pearson and Pierre Elliott Trudeau Airport. You can fly on Air Canada, WestJet, fly out of the island and go from on Porter. Excellent. No solution is created equally. Air Canada offers certain services that Via Rail doesn't, that a private jet doesn't. Right? So it's understanding what your client needs are. Not all TPAs are created equally. It's about finding the right partner to have a solution for your client. It's as simple as that. You got to ask those future-based questions. That's most importantly. Start the conversation with future-based questions. Find out where your partner is going and find the best solution to meet their needs. That's what it's all about. That's what our business is all about. Not our business at the Benefits Trust, our business in helping clients. That's what we do to advise our clients. And you think about the last time you've purchased something major in your life. Were you dealing with that professional? Were they asking you those future-based questions? And when they do, when you think back about that transaction and your head's going up and down, you go, man, that was a pleasant experience because the guy understood me. He got me. The professional salesperson understood and got me and gave me this great solution. Price was a component that was discussed later. It wasn't right out of the gate, right? So that's my story. I'm sticking to it. We've got some we've got this chat TBT coming up, as Lindsay mentioned, on April 2nd. And again, Blake Waddell, great. He was on the call earlier last week, but a great producer as well. But he is an advisor. He is going to be talking about his approach to ASO. I'm going to be asking him some tough questions and some interesting questions. So come and check that out. We're also doing some more CE credit sessions in April. We've got April 8th, April 10th, and I think the week after that. But check out thebenefitstrust.com and sign up. But we're going to be doing a session on ASO Math Simplified. One of the things that's, as Lindsay said, when we first started talking about joining the Benefits Trust, Lindsay said, I'm not good at mathing. And I go, perfect, you'll fit right in because we have a very simplified approach that makes sense, that gets clients' heads nodding up and down. Check that out. As well as that, again, it's 11 o'clock, so we're going to stop right now. But if you want to stick around and have discussions and questions and ideas, we're happy to do so. So let me just stop sharing for this moment. But on behalf of all of us at the Benefits Trust, we'd like to thank you for spending an hour with us. Mike's going to send you a CE credit for participating today, which is awesome. As well as that, you're going to be signed up for our Trusted Advisor newsletter. In addition to that, you're going to get invites for these things in the future, but visit us at thebenefitstrust.com and check us out. If we're doing business together, I want to thank you for your continued business. If we're not doing business together, come and find out. Send us a quote, right? We'd be happy to provide you with a solution. We'd be happy to have a discussion with you, just to help you learn more. It's as simple as that. It's just helping you learn more. And we want to help you do that, because the better you serve your clients, the better off the industry is. It's as simple as that. So on behalf of all of us, we want to thank you for your time, and stick around for any questions. If you got to take off, we totally understand. Mike's going to send that to you, and thanks for coming. Appreciate your time.